gains. Nigeria's currency also fell 1.2% to 144 I beg your pardon, against the dollar, the most on an intraday basis since June, before settling at 1,438 Naira to the dollar. Analysts warn the threat could destabilise the Naira and deter foreign investment amid ongoing economic recovery efforts. Adebayo Adebanjo, Investment Associate, Research and Strategy, CardinalStone, joins me now. Good morning. It's great to have you in. So can we say that what happened in the markets yesterday had a bearing to Trump's comments over the weekend, or was it just profit-taking after Friday's gains?
So, yeah, I would say it was largely markets, reacting normally. I think the announcement from the U.S. president, making Nigeria a country of particular concern, I think it just happened to be coincidental that it happened this weekend, and then, markets are reacting. I mean, if you look at how the market performed, speaking to the equity market last week, I think you could see that on a week-on-week basis, the market was already down after an 8-week streak, right? So it shows you that already there was a bit of a bearish sentiment in the market even prior to Trump's announcement. So I wouldn't exactly tie it to it. Also, speaking to currency, right? In my interaction with traders, it was said that at the beginning of the trading session, we saw the Naira fall to as high as about 1,470, but trades were not settled at that rate, right? No trades happened at those rates, right? Ultimately, trades eventually started happening at 1,430, 1,450, around that range. So that kind of shows you that largely markets were kind of reacting to market itself, and trading were going on as they would typically have happened even before, or even if Trump's announcement did not happen. And then also Eurobonds, right? If you look at how Eurobonds indicative quotes have been trading, yesterday, truly, markets opened with bearish sentiment. However, later in the trading session, we started seeing buying interests. And what's interesting is even when the market, and also, the declines were across all sub-Saharan Eurobond markets. So that just shows you that, only Nigeria is not the only market that was, that was kind of hit from sell-offs, so to speak. It was a largely, sub-Saharan African thing. So I wouldn't tie, how markets have reacted to Trump's announcement at all.
So with or without Trump's announcement, the market would have reacted the way they did yesterday.
Absolutely.
All right. I mean, as you have pointed out, October has been, a wonderful month. Apparently, it was one of the best performing months this year, with stocks rising 8%, second only to July's performance. What would you say was a key driver for the rally we saw in October?
Okay. Well, I would say that, which is typical of periods where earnings releases are published. Usually what you see is investors always take position ahead of earnings such that they can, take profits once those results, show very, very strong numbers. And so what we have seen is, basically investors were taking position ahead of this period. And now you are seeing sell-offs. And that is basically, investors who are taking position in October now, taking their profits now in November as those numbers have been released. So you typically see investor positioning ahead of every quarterly earnings release, be it Q1, Q2, Q3 as well. So typically, just the way that's happened, you begin to see investors also take position sometime in December. And there's always a talk of around a December rally, which has not necessarily been consistent, but I think that over a 10-year period, we have seen more years of December rallies. So I would say that, we might see a rally again in December ahead of, full year numbers for companies who will be publishing much early into 2026. So that's largely what the expectation is.
The Santa Claus rally, we call it. And we'll be tracking all that and more. But for now, it appears profit-taking is ongoing. And I know you have said that Trump's threats did not have any effect on the market. But do you see in any incident it's affecting in any way the risk premium on Nigerian assets? And who decides how this premium changes in the global market? How might this affect Nigeria's access to foreign investment or credit in the coming weeks?
So I think that for Trump, and I think over his the beginning of his tenure, you'll see that he has been very, very active on social media, and I think that it's his way of you know, forcing conversations with multiple leaders across different countries. As you've seen, even around threats of tariffs, right? Ultimately, once these announcements are made, it forces a kind of conversation, dialogue with heads of states, and ultimately there's ultimately resolution to these issues. So I think that the announcement largely is to bring our leadership to a round table, to have a discussion around how to deal with this threat that is basically happening in the northern part of the country. So I think that's what it is. And because we've seen this happen multiple times, he makes an announcement and then he has closed door meetings with these leaders, and then there's some form of resolution. That's how I see it. And I think the global market has also priced this in. So I don't see it particularly affecting our risk premium. Already, over the course of the year, I think our risk premium, speaking to our equity risk premium, I think it was somewhere around 14, 15% at the beginning of the year. And as of this moment, I think it has dropped to around 13%, which shows you that our market is also, responding to the improving macroeconomic environment. The premiums that foreign investors are asking from our market has also been declining because there's improved confidence, in our economy. So I don't see this shaking our risk premium in any way. I think there will be very quick resolution to this matter. And then it should not necessarily impact Nigeria's standing in the eyes of foreign investors, and I don't think it should affect our ability to raise capital in the foreign capital market.
All right. A lot of confidence there. Perhaps the reform driving the confidence. Maybe I'll ask that question later on. But as for the NGX, 49.37 year-to-date return. What are your thoughts on this, especially compared to some of the previous year? Did you expect it? We're pushing towards 50. Who knows? We'll probably hit it by the end of the year. What are your thoughts around where year-to-date returns on the NGX stand?
Okay, so it's not a surprise. If you look at what happened in 2020, the market beat 50% in 2020. So I would say that we're getting used to this kind of numbers. And if you do a 5-year average of how our market has performed, on average over the last 5 years, the market has returned over 39%, which shows you that we're in strong double-digit return era. And this also shows you that in addition to foreign investors, coming back into our markets because the macro story is improving. I think that for the longest time, a lot of Nigerian companies have been grossly undervalued, and that has also spurred a lot of interest, in the markets. Also, we're beginning to see a surge in, a much more diverse investor base. Much younger individuals are now taking position in the equity market. This year, I have had multiple conversations with more people who are interested, in taking position in the equity market, right? And because our market is still very, very young, I think that the upsides in our market for the longest, I think, still persist. I still think that there's still a long way to go as far as our market is concerned. And the regulator is also not resting. The NGX has shown a lot of signs to improve, activities in our markets. You're looking at extending the trading hours, also trying to improve settlement periods to T+2. So all of these things, are some of the factors that are also driving a lot of interest in our markets, which I think is supportive of the performance. Also, the macro story, as you've seen, a lot of consumer goods, and I think consumers have been the best performing stocks on the index this year. You'll see that the macroeconomic environment has improved as far as inflation goes, as far as foreign exchange goes. A lot of them, if they didn't report any FX losses, they reported significant gains. So that just shows you that they are coming back from the challenges that we saw in 2023 and 2024. And even those years where we had those problems, the market will still return in excess of 35%. So I think as we enter 2026, a year of stability where we enter 2026 with stable macroeconomic environment, I think that we should see, much more, participation as, companies continue to report very decent numbers.
So 2025 recovery, 2026, you're saying stability is what we should expect.
Definitely.
We're also seeing repricing of, some of the stocks on the NGX. What are your sentiments around what's going on?
So by repricing, you mean, are you referring to some of the companies that are now valued over $1 trillion?
Right.
And I think this probably ties into, Boa Foods being the most capitalized stock on the index. Very interesting. Yes, this is not a surprise. What we have seen, for the companies they call suits, that's, companies that are trading over a trillion, right? For Boa Foods, not really a surprise for us. I mean, the fundamentals have been solid. I mean, when you take a cross section of all the consumer goods companies in Nigeria, I think, when others were being hit hard by foreign exchange, high operating costs, I think Boa Foods was one of those companies that was able to, stay steady, in that period. And if you look at their earnings results so far, while everybody else is in recovery mode, they continue to work stronger, right? So this is not a surprise for us. I think, investor confidence in Boa Foods is really there. But I also think the other side to Boa Foods particularly also speaks to the free floats. Most of it is not, available for trading on the floor of the market. Boa Foods is still being held by a majority shareholder. So because of that, companies that have low free floats, tend to have, periods of momentum or surges, in their share prices, which may not necessarily be driven by fundamental factors. So I think that also plays a role in how Boa Foods has traded. But if you look at it from a fundamental standpoint as well, I think Boa Foods is a very, very solid company.
Wonderful. And from Boa Foods, let's talk Dangote Refinery proposed listing within the next 1 year. There have been questions on whether or not the NGX has enough market depth to take that listing on.
I think it does. I mean, from what I've gathered, I think, Dangote is looking to list just 10% of the refinery, right? So I think ultimately capital will go where it would find return, right? And because refining it's a budding industry in our markets. As you can see, we are just beginning to develop strong capacity as far as our refining industry is concerned. So I think that, capital will find its place, and maybe not only just local investors. I'm sure that there are foreign investors who are also looking to take a piece of that pie as well. So yes, I think that there's capital to take it on. However, the worry is that, it's a very large entity, and I worry that the size on the index might skew the overall market performance. I mean, already we are seeing that with some of the most capitalized companies. When companies like Dangote Cement, Boa Foods, MTNN, Airtel Africa, when they sneeze, the entire market, catches a cold, right? So I think that, that might further worsen that situation where you have a very capitalized company that can drive, the overall market sentiment just because of movements in that name. So I think, it's a welcome development, and as more companies, continue to list in our market, it would further deepen the market and it will reduce the impact of, one particular stock swing the overall market.
All right. I mean, let's see how, that pans out. Back to Trump. Before his remarks, analysts from Future View, Coronation, and even CardinalStone, they had predicted a mild bull run this week. Day one, bearish. Are you still holding on to those predictions, or has anything changed, and what is informing those changes in predictions?
I mean, for us, I wouldn't say that we predicted a bull run. I mean, we said, if you look at our model equity portfolio, we had said that, we'll take position wherever opportunity presents itself. And because we had also anticipated that post Q3 earnings, there will always be profit taking. So I wouldn't say that we expected a bull run this week. In fact, the bearish sentiment already started last week. We saw the market down around 0.95% week on week. So I think that might persist actually. And you already kind of see it happening even today. I think that when the market opened today, some very notable names are already down. So it's not a surprise. I think that ultimately, later in the month, the market will stabilize, and then questions will now be, what are your expectations for Q4, for full year, and what names should we begin to position in towards next year? Because again, remember that pension funds and big asset managers are also going to have to rebalance their books ahead of next year. So in the course of rebalancing your books, you have to take positions in some certain names ahead of next year, right? Because of course, we see that when you want to take advantage of gains or returns on a year-on-year basis, you'd want to start your investments at the end of this year or early next year, and that's what we would see. So I think that buy sentiment, to rebalance portfolios will also, drive, some names up because of the kind of liquidity that, pension funds and asset managers have. So I think that's what will drive the bullish sentiments much later, in the month into December. But I don't think that, from a fundamentals or from a company's point of view, I don't particularly see anything. I think all of that has been priced in as far as 9 months numbers are concerned. So it's just be portfolio rebalancing and what people think for full year 25 and expectations for full year 26.
I mean, it sounds to me that you're saying the NGX is somewhat insulated from the external global shocks. Is that what you're saying?
Yes, basically, because if you look at what investor participation has been over a 1 year period, year to date, foreign investor participation in the market is around 22%. And so local investors are basically the majority in terms of how our market is being trading. So that shows you that to an extent, not entirely, but to an extent, we are insulated from, risk of sentiment that happens in the global space to a very large extent, because really, local investors will always participate in these markets. In fact, I think that there's also some concerns around, capital gains tax. And I think, Taiwo Idile has been doing a lot to kind of, explain or, basically teach the markets, what to expect, as far as the treatment of CGT would be. But, some investors still have, their concerns as to how much the government is going to be taking from the gains, they have made. If those gains are, if the tax is going to be calculated on all the gains they have earned since they took position in certain stocks, or if the calculation is going to start from the beginning of next year. So some of these, lack of clarity is probably what I think is also part of why we are seeing, some bearish sentiments in the market. But as far as, global markets go, barely really.
All right. I mean, hopefully we get that much needed clarity as time progresses. But thank you so much for your time. Adebayo Adebanjo, Investment Associate, Research and Strategy at CardinalStone.